Hi everyone, let's go over my bullish and bearish high time frame, medium time frame, low time frame and micro Elliott Wave scenarios on Bitcoin. And the reason I want to go through all is because price at the moment is at a very important area on the Bitcoin chart, especially for the medium time frame scenarios, which then are in confluence of course with the higher time frame scenario. So I quickly want to run you through everything so you have a good picture of what is going on. So the bullish scenario is that this is a wave 1, which is extended, followed by a wave 2, 3, 4, and then we're looking for an impulsive structure to the upside in a wave 5, which means that on the lower time frames you want to see an impulsive structure in a 1, 2, 3 and then eventually 4, 5 to finish the bigger wave 5, which is not allowed to go above the 1-to-1 over here of this wave 3, which sits at 38.2k. In this scenario, the invalidation is if price is going to enter the price area of this wave 1. So 25.3k, if price is moving to the downside and hits this area over here, then for me this scenario is invalidated, because in an impulsive structure you don't like to see overlap between a wave 1 and the wave 4. So the target area for wave 4 is therefore between the 236 and then eventually the 25.3k level. If we go to the more, I suppose, bearish scenario, which eventually is bullish because you still expect more upside, we're looking at already a finished wave 1 or wave A structure, followed then by now a 3-wave corrective pattern in either a wave 2 or a wave B. The most common targets for a wave 2 are between the 0.5 and the 0.786, pulled from the low to the high of wave 1 or A, and the common targets for a wave B is the 382 all the way to the 886. And that is interesting because if price would move to the downside and bounce on the 382, the probabilities for this being a wave B will increase. Now, if price would move to the downside and go to the 0.5, the golden pocket or the 786, then it's kind of neutral, and it all depends on the following move to the upside. Are we going to get a wave 3 with a high amount of volume, wave 3 being more vertical as well, or are we going to get a wave C, which is more of a lazy structure, more like a horizontal move to the upside, and volume being quite equal to the move on wave 1 or wave A? That's something we have yet to see, of course. The fib times that you see on the chart are the fib times that are taken from the low to the high of wave 1 or A, and then you double click over here, and preferably the low will be made at least after the 0.382 fib time, which currently sits at the 8th of June. And if I have to pick like a preferred scenario on the high time frame at the moment, I might prefer this one at the moment based on the lower time frame scenarios that we're seeing. But of course, like both of the high time frame scenarios are really close to me and something I'm looking at. On a medium time frame, we then have the following going on. In the bullish scenario, the corrective structure is already finished. You want the wave 4 to be finished over here after a zigzag structure ABC, hitting the target area for a wave C between the 1 and the 1.236, taken from the high to the low of A to the high of wave B. Now this wave C is a bit shorter in time. It is about 62% of the time it took to develop wave A. Usually a wave C takes a little bit longer than wave A. Now it's not impossible for wave C to be shorter. You like to see a wave C end between the 0.618 and the 1.618. However, it is short and it is less common. Another thing that I think is for me a bit more important is that the bounce over here was not on a target box, and my target boxes are areas of confluence and very often very well respected, and I didn't really have any confluence except for a support resistance flip as highlighted at that moment in time. Resistance over here, back into support, for then eventually a bounce to the upside. And yeah, that is not of course the greatest support for eventually a start of an impulsive structure, where if we are looking towards the upside, we want to see this to be a wave 1, then followed by a corrective 2, and then this is the beginning of a wave 3. And the problem at the moment for the beginning of this wave 3, and we have to of course wait and see how it develops, but I already mentioned a while now that the volume in this structure to the upside over here is not yet that impressive. So if we look at the volume without those signs at the bottom of my screen here, you can see the volume is not that impressive. If price is moving to the upside, you want to see volume following price towards the upside. But yeah, the volume is quite low and actually quite equal to the corrective structure that we had in a wave 2 as well. Besides, counting this wave 1 in a nice 5-wave structure is actually very difficult, and it looks better as a 3-wave structure. Now you can count a 5-wave move in this wave 1, but it is simply simply not a really clean wave 1. So also here again, the bearish scenario, this is the one we have been looking for a while now, which again is my more preferred scenario, where this is an ABC, yes, but the ABC is then part of a wave W, followed by still a continuation of the corrective structure, and then a wave X, where we were looking for two main areas to wait and see our reaction. The first was the highs over here at 28.3k to wait and see what price is going to do after it's going to take these highs, because the highs over here were made during the news. There was a lot of absorption going on the CVD. For now, a wick above, taking the liquidity and a move to the downside. And if price would continue, the next area of interest is the blue target box right above between 28.9k and 29.2k, for then eventually continuation to the downside after wave X is then finished, and we're looking for a wave Y. Wave Y is then a three-wave structure, which can have many different forms, W and wave Y. So the first structure and the last structure can be a zigzag preferably, or a flat, or a triangle in a wave Y, and wave X can be any corrective structure. One of the targets of wave Y is the 0.618, which is just below the double bottom over here at 25.8k. So that could be quite interesting for a liquidity grab, and then eventually a continuation to the upside. Another common target for wave Y is between the 1 and the 1.236. But that is basically in between my target areas, which is not great. So I'm looking at these two target areas as well, that if we don't get a swing failure pattern, taking the low, closing above, then moving to the upside, then the yellow target box and the blue ones are the ones I'm going to look for between 24.3k and 24.8k for the yellow one. And the blue one is then 21.8k and 22.6k. Then we go to the lower time frame scenarios, and you're going to see everything is connected from the high time frame to the lower time frames, because on the lower time frames in that bullish scenario, right, we want to see an impulsive structure to the upside, where this is then a wave 1, 2, and then eventually a bigger 3 to the upside. Now, I already spoke about the wave 1, but another thing that is not really supporting a bigger impulsive structure to the upside is that the 886 is a rare target for a wave 2 pulled from the low to the high of wave 1. So common targets again, 0.5 to the 0.786, and the 886 is a rare target for 2, but a common target for a wave B or a wave X. Now, if this is still a wave 2, because the 886, it is a target nonetheless, right? You want to see an impulsive structure to the upside, volume following, where the minimum target for wave 3 is at least hitting the 1.618 at 28.9k, but preferably it is extended to maybe higher targets like the other blue lines that you see on the chart, where eventually this wave 5 has to at least take the high of 31k, right? Because in the bullish high time frame scenario, we're looking for a wave 3, wave 4, and then we're looking for a wave 5, which has to end above the high of that wave 3. So that is important. But as you can see, the preferred scenario, also in the video yesterday morning, might actually start to play out with a little bit of a dump. But hey, we'll see what happens here, right? There we go, right during the video. Gotta love to see it, love to see it. So okay, we'll see how this plays out, of course. The bearish scenario on the low time frame, the one we've been mainly keeping an eye on, of course, is that this is a three-wave structure. So then we have an A or a W followed by an E or X or a B, bouncing on the 886, and then a move to the upside in either a wave Y or a wave C. A wave Y is a three-wave structure, and a wave C is a five-wave structure. The most common target for wave C and wave Y in this scenario is between the 1 and the 1.236, which has been very nicely respected indeed. A bit of a wick above, which is no problem because we did identify this as a resistance area at 28.3k, for then eventually a move to the downside. A rare target for wave Y or C is the 1.618, sitting also at that blue target box, but it is not preferred. A reversal around this area is the preferred scenario in the bearish scenario, where you now want to see price moving to the downside. And then the micro bullish scenario, which, well, just got invalidated, we were looking for this to potentially be a 1-2-1-2 or just a bigger 1-2 and then a 3 to the upside, because in this scenario, we're then looking at this horizontal structure for potentially a wave 4, where you don't want to see high time frame candles close below the 0.5 fib. So if this one finishes over here at in 11 minutes, this is not what you want to see. Also, this is a wick. It's quite a big wick below the 0.5. And I think we might even be close to hitting the 618. Let's quickly check while prices. Yeah, we actually hit the 618, which is a rare target for a wave 4. So we have to wait and see how this goes. But this kind of like, look at the volume as well, right? Volume peak while price is moving to the downside. Doesn't look too bullish to me. But in this scenario, you want to see a wave 5 to the upside. However, as mentioned in many videos, the more bearish scenarios are the more preferred scenarios, especially in the video of yesterday morning where I highlighted every preferred and alternative scenario on the medium, low time frame and micro, where the bearish scenarios just look a little bit better. In the bearish scenario here, we're looking at a potential 3-wave structure in an ABC. I changed it to an ABC also because of a great comment of someone watching the video that said, hey, a WXY and then a bigger wave Y, is that a possibility? It is, but preferably you have a simple structure, either an ABC or a flat or a triangle. So I just changed it to an ABC. The targets are the same though. The 1.618 is a rare target, taken then from the low of A to the high of A to the low of B, for then eventually what you want to see is a move, a continuation to the downside. And if we then go to the CVD and have a look at what has been going on, then over here, quickly refresh, we had a bearish divergences as well. So we had bearish divergences, lower high on price, higher high on the CVD. Now we did have some bullish divergences while price was moving to the upside, not giving too great confidence of a potential short scenario over here. But as price then moved to the downside, then continued back to the upside. If you look at the CVD chart over here, you can see that still the CVD that we had up here, right, compared to the CVD that we had over here is still like almost equal. You can see that the high on the yellow CVD over here is like at the same level of the high on the CVD of the high that we made on the price. So over here, it's almost the same level, which kind of means there's absorption going on, right? So lower highs on price equal to higher highs on the CVD, bearish divergences. One can argue like locally over here, you had a higher low in price and then a lower low on both of the CVDs, but one should never forget the bearish CVD divergences as well. That didn't yet play out because now it played out because we took the low. But you can't say we have local bullish divergences. Yes, we do. One could potentially trade it, but do not forget you're also trading against potential bearish CVD divergences, and now these already played out as price has moved to the downside, so we have to wait and see what happens. And also lastly, on Friday we got some news, so let's see what happens on Friday, 2:30 p.m. Central East European time. This being said, I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD. So thanks for watching and subscribing, and I will see you at the next one. Bye bye.